We are joined today at Active ETFs InFocus by Noah Hamman, who is the CEO of AdvisorShares. This is the company behind the Dent Tactical ETF, the first active ETF on the market to have a fund-of-fund structure. Noah, welcome to Active ETFs InFocus, and tell us a little bit more about yourself and how you got into the active ETF space.
Thank you very much. My background is I've been working on ETFs for a while now. I worked at Radix Investments and started their index-based ETF business, and we launched their first ETF in 2003. So I've been working, in and out of the ETF space since then, growing out that product line, and then transitioning to starting up AdvisorShares, focusing in on actively managed exchange-traded funds.
That's great. That's great. So, where do you see the active ETF space going in the next 5 years, say?
I see it growing a lot. You look at an ICI statistic that says 85% of the equity mutual fund assets are actively managed, and in an exchange-traded structure, they haven't had anything that really competes with those assets in that structure, and so I think there's a huge opportunity for actively managed strategies in that ETF structure.
Mm-hmm. That's great. So I guess on the flip side, what do you see being the main challenges for the active ETF space, and how does AdvisorShares plan to overcome those hurdles?
Good question. There's probably a few challenges, but I think the biggest one still starts with education. There's a lot of people out there that still don't understand what ETFs are and how they work, and so I think that's by far the biggest thing, is helping people understand the benefits that the structure provides. And then the next piece that you have to educate on is the investment strategy and the investment manager, and that has its normal challenges. You're positioning yourself against other bigger companies that are more established. In our particular case, how we hope to overcome some of those is we're working with managers that already have a track record managing money. So we're not, picking obscure managers that don't have any experience. They might be managers that people don't have easy access to today, but they would in the structure that we're able to offer them in. But we're able to take, their experience and their expertise, and in some cases their track record, which most of the time you can read in the prospectus, and be able to offer a product, with a proven money manager to investors.
Okay, that's interesting. So I guess specifically for the Dent Tactical ETF that's been on the market for a while now, have you been satisfied with the growth and the level of investor interest in that product?
We have. For a while, until PIMCO came into the space, we were the largest actively managed exchange-traded fund. We launched in the middle of September and have grown almost to around $30 million. So it's been nice, steady growth in the product as we get an opportunity to explain people the investment strategy and how it's different from what's out there. And in particular, this investment strategy has a tactical nature to it, so it's designed to react to the volatile markets that we're in today. Right. That's a well-received story, and I think our asset growth has been reflective of that. So we're happy with it, and we hope to continue to see it grow and perform well.
Mm-hmm. So something I guess that's in the pipeline for AdvisorShares is the Focus Growth ADR ETF, and this will be the first active ETF that will be investing in international equities. Who are the managers behind this fund?
It's a firm called WCM Investments, based out of Laguna Beach, California. Again, just another example. They're a firm that has over 20 years experience. They're a solid, well-pedigreed, great experience. They've been only an institutional money manager, so your average investor really hasn't been able to get direct access to them. Now they can in an ETF structure. And in particular, we're running a strategy they've been managing now for 5 years. It has a history of outperformance over its benchmark. And so, again, the same thing, your regular investor and financial advisor of any size account will have access to a very good investment team such as WCM.
Mm-hmm. You also announced a partnership very recently with Peritus Asset Management to launch an actively managed high-yield bond fund. So I guess PIMCO is also very much in the active fixed income space. So how do you plan to compete with the likes of PIMCO?
We're going to compete with them, I think, in two ways. One is maybe we actually might outperform them, but we'll see. Peritus actually has a 10-year track record, a very good track record. And the same thing, you'll be able to see that in the registration statement we hope to eventually file with them. So we're excited to bring a really good money manager in that investment strategy. And I'd go back to the diversification point. I don't think an investor's truly diversified their fixed income allocation if they're all in on PIMCO. They're a great shop and they have a great strategy, but for us, diversification means not just asset classes, but investment managers and styles. So I think we'll have a pretty compelling option for investors to do that with their high yield allocation.
So I guess more from a business model point of view, AdvisorShares really is trying to help active managers launch ETF products, which they haven't been able to previously. Another company that does that also pretty much is Real Advisors. So how does AdvisorShares plan to differentiate themselves from other active ETF issuers like Real Advisors?
It's a good question. I can't say that I understand their model completely, but my sense is they really focus in on a lot of institutional firms. You look at something like an American Beacon, a $60 billion mutual fund shop. That's a great partnership and a great relationship for them. And so they seem to have partnered with those types of firms. For us, we partner obviously with institutional money management firms like a WCM, but we partner with a Peritus Asset Management, which is a Colorado-based investment advisor. And same thing with a product that we have in registration, another RIA money manager. So I think with our model and how we'll differentiate is we work with a lot of different types of money managers of varying size and strategy. And I think, as you'll see with a couple of our products, we'll probably have more of an alternative bent to us. There'll be something really different and unique about our investment strategies with our underlying advisors. It won't probably be a lot of large cap value with 300 positions that kind of try to outperform a benchmark within a certain stated range of risk. We're going to have managers like WCM where they have 20 to 25 picks, and they're either going to pick really well or pick really poorly, or even long short strategies that, again, I think are good diversifiers and good complements to people's existing investment portfolio.
Now, one of the biggest opportunities that active ETFs face is to break into the 401k and retirement portfolios. How do you think active ETFs can do that going forward?
Well, hopefully how they can do it is by offering a compelling investment solution within a great overall price, meaning management fee and tax efficiency and operational expenses. For me, at least, ETFs are all about choice and providing investors choice, and I think that's what people are looking for more of in a 401k platform. So I think, practically speaking, we've got a lot of big firms looking to make their way into that space. I think we'll benefit from their efforts. For our firm in particular, we're connected with our investors who have made an acquisition in a professional employment organization, which gives us direct access to develop an ETF-based plan for their qualified 401k plans that they offer. So we're definitely looking at that space and looking at how we can get our offerings available on those platforms as well.
Very interesting. Finally, I guess, looking into the future, what kind of strategies and investment options is AdvisorShares looking to bring to the market in the form of active ETFs?
It's a good question. As you kind of mentioned earlier, we're a bit of a platform for advisors to develop their own investment strategy. So for us, it's not about coming up with what we think is the best investment strategy. It's talking to advisors and talking to investors to figure out, one, what they're really good at, and two, what's out there in the marketplace in terms of needs. So we really talk to advisors to find out who's interested in developing products, who has a great track record in an area of expertise, and who has something that's very different that would work well in our structure that we would have an ability to distribute. So we're pretty open to the types of strategies we'll build in the future. Again, I think they'll probably all be caveated with having something different and something unique about them. I think just because you're in an actively managed exchange-traded structure doesn't mean you automatically generate sales. You've really got to have something compelling about the strategy that makes people want to move money from where it's at today into your product.
Right, that's fantastic. Noah, thanks a lot for joining us, and we wish you all the best.
Thank you very much.